Hey traders, Raghee here, and in this recap video I'm going to teach you a way to use intraday time frames to better time trades. Now this one is especially interesting because whether or not you're looking at the Australian dollar futures or the Australian dollar versus US dollar Forex, it's the same market, by the way. One is the Forex off exchange, one is the futures on exchange, but you're still trading the two same currencies. But what's interesting is we've seen a dramatic move, weakness in the US dollar, and the Australian and New Zealand dollars have been pretty strong, and that's created a pretty significant rally, a short squeeze even, if you will. The short squeeze, though, is still within the validity of the overall swing short, which we've taken a number of times and has been quite profitable for us. So what I want to do here is think about how the next swing short is going to set up. Now, the tricky part is, and this is completely understandable, a lot of times when you get a candle like this, the last thing you want to do is short it because you feel like, well, look, I'm stepping out in front of a tremendous amount of bullish momentum. So rather than trying to identify where the exhaustion may kick in, which is what an overbought short would be, conversely, you can say, well, two things could happen. One, I may not enter this zone of resistance, or two, this market could keep rallying and I don't want to get steamrolled by the bullish momentum. And that's where you can transition over to a 5 or a 15-minute time frame and better time that entry. And that's what I'm going to show you here right now. So why the short-term 5 or 15? It allows us to be nimble, and it actually shows an uptrend that formed during the day today with the green grab candles and the 12 to 2 o'clock angle. So there's a few steps that I'm looking for. One, I want the propulsion dots to stop plotting. So it's as important to have propulsion dots as it is not to have them. So I want them to stop plotting. Two, I want to see this market break the Darvis, which it already has, but without propulsion dots. If that doesn't happen, I'm going to wait for number 3, which is let's wait for this market to take out the next Darvis support at this level and then accelerate to the downside. So no propulsion dots and break that upper Darvis, which doesn't look like it's going to be reality, or no propulsion dots and we trade through basically 76.20 to 76.15. Now this can be a very powerful way to intraday trade trend reversals. In this case, additionally, it's also going to be an alternative for traders who may not feel comfortable selling into 76.50 or 76.45 on the Aussie looking for exhaustion, but would rather wait for the bearish momentum to show itself and you trade with the flow of the movement back to the downside. This could be in any market. It's a very powerful way to trade markets after they've launched like this. I use this on cryptocurrency. I use this in dramatic moves in the ETFs and stocks. Of course, here we're showing it on how to trade Australian dollar futures or the Aussie US on the Forex side. See you in the next update.